I've been invited here today to share a case study with you. An investment company that is successfully solving hunger and poverty using blended finance, using capitalism, and returning above market returns to its investors. And in terms of poverty and hunger, in Africa, we talk about poverty in terms of farmers. Most adult Africans are farmers, and not everyone who wants to eat today can eat. And the leverage point that we found to actually solve these problems for real at scale is to build out the food and ag supply chain. So here's what we do. We invest in companies that buy food from existing farmers. So again, hundreds of millions of farmers, they already know how to grow food, they already own the land. What they don't have is they don't have a market. So our companies that we're investing in are their market. They're buying directly from the farmers. The farmers bring that food to a nearby collection center. Our companies come and pick up that food, take ownership of it, and pay for it. On average, the farmers are earning twice what they were earning in the traditional supply chain. That's pulling up their income to median income, middle income for their home country. They're no longer subsistence farmers. They're now in the middle income for their country. Now, our companies now own that food. They bring it to a city, they do a little bit of processing, and then they sell that food to retailers. In that supply chain, a lot less food is lost than in the traditional supply chain. And because of that, post harvest losses go down. Therefore, there's more food in the market at a lower price. Therefore, more people eat. And our farmers and all their families and everyone they're supporting are eating more as well because they have a larger income. That works. Hi, my name is Looney Libis. I'm the co-founder and CEO of Africa Eats, an investment company that does exactly that. We do it with 22 companies across the continent of Africa. Not the whole continent yet, we're only 4 years old, but 22 companies operating in 8 countries, selling food in far more than 8 countries. This is working. Our companies 10 years ago were tiny. In total, their total aggregate revenues across all the companies that existed 10 years ago was $600,000. And last year, that grew to $36 million. That's a compounded growth rate of 52%. And this year, that compounded rate will continue and we'll get to about $50 million, plus or minus a few million. Now, we said capitalism. And here's what the business model looks like for Africa Eats. We are minority equity owners in all these companies. Minority on purpose, because there are amazing entrepreneurs in Africa already. We don't need entrepreneurs coming in from Europe and the US and elsewhere showing them how to do business. They already know how to do that. What we need is capital flowing in to support the great entrepreneurs that already exist. And then we need to support them. We need to mentor them. We need to train them. We need to connect them. We need to help them grow their companies because when we find them, they're tiny. I just showed you that. And now many of our companies are past 1 million in annual revenues. We have one past 10 million in annual revenues. Soon we'll have more like that, and then we'll have hundreds of millions of annual revenues and so forth. And the third one's important too. So we're not a venture capital fund. We're not a private equity fund. We're not a fund. We're not trying to invest in companies and then have them exit. We are investing in companies that will be the next set of brand names across the continent. And therefore, they will be around for decades, and therefore, there won't be exits. And so we're not looking for exits. Instead, we provide liquidity for our investors by listing Africa Eats and those companies on the public stock markets in Africa. The investors can leave whenever they want without the companies needing to exit. They can simply sell their shares to new investors. Now, I talk about this in terms of hunger and poverty, but we've already started replicating this model for agroforestry. And we've done that under the name Africa Trees, which is also blended capital, although at the moment it's all philanthropic. We haven't added in the at-risk capital yet, but that's part of the plan. Now, the last 10 years of Africa Trees has seen a little bit slower growth, but most of that is due to the fact that Africa Trees is only a year old. Now, to help provide you the rest of the details, my co-founder at Africa Eats, Jumana Tafawa, he and I published this year Berkshire Africa. It's a book that describes the history of Berkshire Hathaway, the most successful investment company ever, and how to apply the lessons from that company to invest in Africa, just like we do at Africa Eats, just like they're doing at Africa Trees. And in my plan, I said liquidity through the public markets. That's not a dream. This is Africa Eats Listed on the Stock Exchange of Mauritius, trading starts December 3rd this year. And not just us. Two of our companies as well are being listed on December 3rd. You can buy and sell these shares 5 days a week on the Stock Exchange of Mauritius. And we've brought the first market maker to this exchange as well to make sure these shares are truly liquid. So if this sounds good, if you would like to use blended capital to actually have an impact in Africa and solve some SDGs, there's my email address. Thank you.